Welcome to our corporate accounting class. Today we are going to discuss about accounts of holding companies basics. Basics in the sense why accounts of holding company is required, what is called holding company and minority interest, what are the things we have to prepare in holding company accounts, and what is called consolidated balance sheet. These all the informations we are going to discuss now. And in this accounts of holding companies, we are having two terms. One is holding company and another one is the final accounts. Okay, actually this should not be called as a final accounts. So what is that? Holding company means what? See, a company which holds the affairs of another one company. The company which holds the shares, which controls the shares, majority of shares, and which controls the management of another company, then that is called accounts of holding companies. The first company, that company which is controlling the activities, which is controlling the management, is called as holding company. And when a company is called as a holding company which controls 51% of the shares, 51% of the boards, that is the board voting rights in the meeting, general body meeting. Okay, if the company which controls majority of share, then such company is called as holding company. And in the same case, if the company having, even if the company is not having 51% of the shares, okay, but it controls the majority of the activities, then in that case also such company is named as a holding company. And another one company is normally called as subsidiary, that is whose management, whose majority of shares are held by the first company, right? Then the second company is called as a subsidiary company. So in this case, we should know two important things. Two things we should know clearly. One company which controls majority of, that is 51% of the shares, and remaining shares are held by the people, held by the persons who are scattered in the market, and normally by one person, two three persons, or by any other person. They are less in numbers, and that's why they are called as minority group of people. Please understand, minority in the sense it is only they are minority as far as the activities of this concern is concerned. Okay, as far as this company is concerned. So majority of shares are by one company, minority of shares by different persons. Okay, they are normally called as minority, scattered in the market. In general, we can take like this for our understanding. Then the capital contributed by the holding is normally the investment in subsidiary company. Okay, the capital contributed by the holding company, which is the capital of a subsidiary company, contributed by the holding company, right? It is the investment of holding company in subsidiary balance sheet. This will appear as investment in subsidiary company. So, if I am contributing major amount of 51% of the shares, for me it is a investment, then that will be the investment appeared in the balance sheet of subsidiary. Technically speaking, another company's capital I am contributing, that's all. Okay, and what things we have to take? On what date the company is controlled by another company, on what date onwards the balance in the shares are controlled by, management is controlled by the holding company. So what we have to do is, before that date, after that date, we have to apportion the profit, general reserve, okay, no capital reserve, only general reserve. All those things should be apportioned. Technically speaking, these two things, both the capital and the reserve are technically called as pre-acquisition profit, though it is a reserve. Okay, so pre-acquisition profit, post-acquisition profit. What is that pre-acquisition profit? The profit and the share and the reserves held in the balance sheet before acquired by another company, right? That is called a pre-acquisition. And after the period of acquisition is called as post-acquisition reserves, right? So please don't confuse this with profit prior incorporation, post incorporation. This is pre-acquisition profit or the reserve, that means before purchasing the subsidiary company. Post acquisition profit in the sense after the purchase of the subsidiary company. That pre-acquisition profit and the reserve also called as the capital profit. Okay, capital profit. What is the meaning for that? The capital is acquired by a holding company. Before the acquisition, it is a capital profit. After the acquisition takes place, then such a profit is called as revenue profit or post acquisition profit. Okay, so revenue profit means the profit earned after acquired by the holding company. For example, to say, for having clear clarification, just I am quoting one example. The company is acquired by the holding on 1st of January. Okay, 1st of January. What are all the profit and reserves earned before 1st of reserve of a subsidiary is named as capital profit or pre-acquisition profit. Profit and the reserves after the acquisition, that is after 1st January, is named as the revenue profit or post acquisition profit. Accordingly, the pre acquisition profit, that is the capital profit, and post acquisition profit, that is the revenue profit, both the things should be shown in the new balance sheet, which is named as consolidated balance sheet. Okay, this we have to calculate. Then point number 3 we should keep in mind, calculation of minority. See, just now I told you majority of shares, that is the 51% of the shares are held by holding. Then what about the remaining share? A share company having a share of 100 shares. Of that 100, 52 shares are held by holding. Then 48 shares, balance 48 shares are held by others who are scattered in the market. That 48% of shares, 48 shares are named as minority group. Okay, this, they are not in majority, so they are minority group. So those minority shares is calculated, that is their part of profits, their part of reserves, right? And face value of the shares held. Okay, all those things should be calculated, that is minority interest should be calculated. And the value of minority interest that should goes to the new balance sheet, that is the consolidated balance sheet. Separately, this should be shown in current liabilities, a separate item. Okay, after reserves and surplus, separate item of this value of minority interest should be shown in the new balance sheet, that is consolidated balance sheet. Then next point, calculation of cost of control, goodwill or capital reserve. Then another one, I am purchasing one company, 51% of shares I have taken over, right? So while taking over of the shares, what are all the profits and reserves that the company is having, proportionately that should be taken by one part, that is the to the extent of the shares what I have contributed, that portion should be taken, valued. Okay, that is called goodwill. If it is a favorable balance, that is goodwill. What is the meaning for that? I invested 1 lakh rupees. Okay, the value of the shares taken over should be considered, the profits and all that should be considered, profits and revenues that should be considered. Okay, so if the value is a favorable one, then it is a goodwill. If it is a negative balance, if it is unfavorable balance, that is, I invested 1 lakh rupees, but the amount of shares, amount of profits, all those things, that goes to 1 lakh 20,000. Okay, like that. If it is a negative balance, then that should be taken as, it is named as reserves. Okay, capital reserve. If it is a goodwill, the amount of goodwill should be shown as assets, as usual. Asset in asset side of the new balance sheet. If it is unfavorable balance, that amount should be taken as reserve, capital reserve should be in the liability side of the balance sheet. Then, after doing all these things, after segregating pre-acquisition profit, post-acquisition profit, that is capital profit and revenue profits, calculating the minority interest, calculating the cost of control, goodwill or capital reserve. Okay, if there is any dividend, etc., that should be adjusted. Any valuation of the assets, overvaluation, undervaluation of the assets may accordingly pre-acquisition period, post-acquisition period. Then after doing all these things, final balance sheet should be prepared. That balance sheet that comprises all the things, that is called that amount is named as, that amount is called as that balance sheet is named as consolidated balance sheet. Okay, that is consolidated balance sheet that should be prepared. That is the final balance sheet. So in this balance sheet, one point we should keep in mind. I am assume A Limited taking over B Limited. So in this, the total value of assets, liabilities of A Limited as well as B Limited, both the things will appear in consolidated balance sheet. But at the same time, A Limited will have a separate balance sheet, that is including the B Limited informations, and B Limited will have the separate balance sheet that is only for their activities. Okay, so consolidated is for the group. Apart from that, individual company is required to show the financial statements, right? In that manner, we have to prepare. From next session onwards, we will discuss about the problems.